Hi, past, present, and future homeowners. It's your homegirl, Justina. Welcome back to another episode of the Property Buyer's Guide, brought to you by the Brief Publications in collaboration with FNB Namibia. Joining us today is Ms. Victoria Hamukwaya, the Growth Manager at FNB Home Loans. We will be discussing crucial financial aspects of the home buying process, including financial planning and building a solid financial profile. Thank you for joining us, Victoria.
Thank you for having me.
To start off with, could you discuss the importance of financial planning when it comes to buying a property?
Yes, financial planning is quite crucial for any potential buyer, as it actually helps them to navigate through the complex real estate market. It helps the clients basically to be aware of what costs to look at. So if we have to look at reasons why it's important, number one, budgeting. Budgeting helps the potential client to basically determine how much or to budget for the property of choice that they intend on buying. And obviously one has to look at extra expenses that are part of this buying process, which includes the municipal rates and taxes, which also includes the maintenance of the property and other utilities. Understanding expenses is the second one, where buying a property includes other hidden expenses that form part of the initial bond. So these expenses can range from the registration fees, we have the initiation fees, administration fees, and other expenses that the client obviously has to foresee for. Another reason why clients should consider financial planning is because financial planning is quite important to align current goals with future goals and also with the property or installment that the client is going to pay. So client needs to consider the future investments in terms of perhaps buying a new property, or perhaps investing in a pension, or even investing in education. So all these needs to be aligned, and that's why financial goals are quite important.
Victoria, can you explain to us why it is important to have a good financial profile in the home application process?
Having a good profile for any potential client is quite crucial, as it increases their chances of having a mortgage loan approved. And it also increases their opportunity to be able to negotiate on different terms and rates in the future. So there are aspects to look at, such as the credit score of the client that any lender will look at. So there are important aspects such as the ITC. The bank also looks at the repayment and whether the client pays on time and the sufficient amount as agreed on. The second aspect that the bank will look at is the down payment, which is also called a deposit. If the client has a deposit or has saved up enough money to put down on the property, it gives the client a better opportunity to be approved. Obviously, it gives the bank that outlook that the client is able to pay in the future, and also that the client is a good-to-go client, because the client has obviously saved up the money for the deposit. The third aspect that the bank will look at, or the financier will look at, is the income stability. What is important to consider is that the client is employed, fully employed, and has a stable income. So the financier will make an assessment based on those aspects as well. So an additional one that I would like to speak to is the savings reserve. So when the bank looks at how much a client is able to save per month, that also accords the client or the potential buyer the opportunity to be assessed and approved accordingly to perhaps buy that house or home of dream home of their choice.
So what it looks like, what you're saying, Vicky, is that there's an entire process that one should start planning for before they start looking for the house. Building up a good financial profile takes time. So it's not just something that you should look at the time that you're ready to purchase a house, but rather from the time you start earning an income, you should already have that at the back of your mind that, listen, I want to build up this good profile so that if and when that time comes for me to purchase a house, I'm ready and I'm in good standing and I'm able to negotiate rates and I'm able to also maybe get a pre-approval quite quickly and get the house of my dreams that you made reference to.
Yes.
So another point that you also touched on is you mentioned ITC. Can you please elaborate and explain for us what is ITC?
So ITC basically stands for Individual Trace Information Report, which is in these days called the TransUnion. It's a bureau where all financiers, be it financial institutions, banks, will access and they will retrieve all the financial information on the client. So basically it's a background of how you have been lending money from the institutions and how you have been behaving financially.
Okay.
Yes. So it looks at how much you have borrowed and your payment record, as I mentioned. So the financier or the bank looks at whether you are a good debtor and how well, or whether you pay your debts on time and whether you are able to pay in the future. So your financial records basically speaks to that. So the credit will be likely granted or declined, also based on your transaction histories, which are on your TransUnion bureau records.
Which make part of your credit profile.
Yes.
Okay. So we've learned a lot today, Vicky. We've learned budgeting is very important. We've learned that once you're ready to purchase a home, or home purchasing, the home purchasing process actually doesn't just start from that moment when you're ready to purchase a home, but it starts that moment when you start earning an income and you start building up your profile.
In summary, these are some aspects to keep in mind. Build your credit record, meaning show that you are able to pay your debts on time and with a prescribed amount. Number 2, check your ITC credit report. Make sure that it's correct and without errors. And if there are any errors, consult the institution that has listed you to make sure that all the errors have been eliminated. Because those ones can also work against you when your application is being assessed.
Okay.
Thirdly, keep up with the payment obligations, meaning that do not miss any of your payments and pay them all in full as prescribed by your financier or by your bank.
Thank you so much for sharing your expertise with us, Victoria. Your advice is incredibly valuable for anyone who's looking to start the home buying process. And to our viewers at home, thank you very much for tuning in. Please don't forget to join us next week where we'll be talking pre-approvals and how important they are to the home buying process. See you.